everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. Follow along as I interview the best and brightest leaders in the insurance industry and insurtech landscape to bring you the latest in digital transformation, innovation, industry trends, challenges, and opportunities, as well as next-gen technologies. We use our experience to anticipate what's next without losing sight of what's now. Stay tuned to find out your next now. Hi, everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. The topic is harnessing a new era of insurance, innovation, and disruption, operations for real business value. And this is based on our recently published, at the end of January, Strategic Priorities Report for 2026 based on survey of the insurance industry, insurers across the industry. I'm thrilled today, a long-term friend, thought leader, and influencer in the market, Gail McGiffin, who's the founder and CEO of GEM Insurance Advisors, is joining me today. Welcome, Gail.
Thanks, Denise. Happy to be here with you.
You know, I think everybody knows everybody, but why don't you just give just a little bit of perspective on what you've done in your career, because I think that will provide a context to the conversation you and I will have.
Yeah, happy to do that. So I have over 40 years in this wonderful insurance industry that we love talking about and living in. Half my career has been on the industry side with companies, both as an underwriter and product developer, and also as a CIO twice with insurance specialty company startups. The other half was on the consulting side, running insurance practices globally from an advisory standpoint, really a big part of the insurance transformation, a lot of what's happened on the technology front. I've now transitioned to do independent advisory work through my own firm, and a lot of my focus is on AI, particularly as we're heading into more agentic AI. So exciting times.
Totally exciting times, and you and I have been in this industry about the same amount of time, which is why we've become really good friends and cross paths in our many different roles. Okay, so today's agenda, I'm going to take you through first the industry challenges, second, what are the business priorities that insurers are talking about, second, technology priorities, and then near and dear to Gail's and my heart, data and analytics priorities, particularly around AI. And then kind of an action plan for leaders. So to get us started, first of all, kind of the state of the industry. As I look at the two different segments, fortunately, we've somewhat stabilized over the last couple of years, but we are facing headwinds. We're in the first quarter of this new century, but in many ways, we're still operating 20th century business models and technology that, quite frankly, are impacting the business and financial metrics of insurers. And these headwinds and underlying challenges for insurers are just quietly building, in some ways almost not real prominent or visible to most insurers. And that's where there are challenges around profitability. We're too dependent on investment gains. We've got to find better operational efficiencies from an expense ratio standpoint, decreasing that. That can help us improve the pricing, which then ultimately can improve the competitiveness in the market. But more importantly, it can really help in really closing this protection gap that we're seeing with customers. And at the same time, we're seeing a lot of M&A, both on the distribution and the MGA side on P&C, but also on the L&A&H side, where a number of insurance companies, particularly annuity companies, are being acquired by PE firms to be able to leverage the capital and really drive a different level of growth. Gail, any kind of thoughts that you have when you kind of look at this?
Yeah, I think just one point to highlight around on the P&C side especially is that we've been with really hard market conditions now since 2019, and a huge uptick in E&S. A lot of startups there, both on the distribution side and the carrier side. However, we're definitely seeing hardening transition into some softening, not by line of business, not everywhere, but certainly some softening in line of business for a variety of reasons. So this cycle is transitioning, and that just puts more pressure on the profitability equation, right? And that is pricing in terms of risks. It is the cost equation for the enterprise. And so I think that's, we should all be mindful that we won't be overnight, like a switch goes off going into a soft market cycle, but we are seeing softening conditions in some product lines, and that just introduces yet again another set of pressures on loss ratio, but also, of course, the ever-present cost side of the business, the expense side.
Yeah, even AM Best has come out with a recent report that even highlights that softening, particularly in some of the lines of business in commercial.
Mm-hmm. Yep.
Yeah. So as we kind of think about what's been happening in this first quarter of this century, there's been a lot happening that has really reshaped a lot of things that we've done from an insurance perspective. You know, with the introduction of the internet and then the whole .com era, to the iPhone, to the emergence of InsurTech, kind of pasted in there are a number of kind of market events, you know, the hurricanes, the financial crisis, pandemic. You know, we've kind of evolved through this period of time, and it's actually gone a lot faster as each of these kind of have come. And the interesting thing is that between the internet, the iPhone, and the cloud, those are considered seismic technology landscape shifts. And now we have another one with AI, with the introduction of ChatGPT in 2022. And this is actually accelerating even faster than the previous three. And, you know, from our perspective, we think that for insurance, AI will have a profound impact on the business. It's going to create a new level of automation and streamlined workflows, employee productivity, customer engagement, and most importantly, it's going to help drive down some operational costs that will drive down the expense ratios and improve profitability and also improve competition in the market. And I think what John Chambers said here is really interesting. He was the former CEO of Cisco, that this speed of AI is so much different because it's going at 5 times the speed. And they believe, or he believes, that you're going to see companies improve their productivity and reduce their expenses by 7 to 10% during this decade. That's pretty powerful. And in fact, Gail, I actually made a prediction last fall at an InsurTech panel event that I think that we could potentially see in the next 5 years, 5 to 7 years, an insurance company that could reduce its expense ratio upwards of 20 basis points, that then will begin to realign who real leaders are in the marketplace in competitiveness. Thoughts?
Yeah, absolutely. I love this quote by John. I totally agree with it. You know, also what's different is it's the era of AI. This isn't about adoption. It's here. It's pervasive. So you don't get to choose to try out blockchain or RPA. Like, it's in our personal lives. It's in our business lives. You know, as I think about this journey of transformation, you know, a lot of what we've seen in the insurance industry has been transformation to automation that really kind of reinforces current business models. We haven't seen, you know, major disruption of those business models in the industry. I think that the advent of AI will not only bring improvements, and we're already seeing some of it on the productivity side and expense saving side, but I actually also think it's going to have impact on the effectiveness side, which is that loss ratio, and also growth, and enabling, you know, underwriters, and, you know, having the lift of productivity, but also, you know, the advent of more real-time insights, you know, speed of information gathering, collaboration that's going to speed their decisions but enrich them. I think that's AI is going to play a pretty big role in that. But what I think about, you and I've talked about this, that, you know, we haven't really seen disruption to the business model. And some of that's because we're in a very regulated, you know, risk management world of insurance. There's regulations and litigation, everything really put sort of guardrails and principles in place for the business of insurance. But when you think about, you know, if we think about the technology transformations that have occurred, mostly moving from legacy to more modernized cloud-based, particularly the core, right, policy billing and claims, I think when you think about AI, it almost is going to force us to think about the business model differently. It doesn't mean we throw out the playbook entirely, not that you couldn't, but I think that there are opportunities for reinvention and reimagining that may not be, you know, blank sheet, but the power of what you can do, particularly with agentic. I think the way we think about delegation and just, you know, moving sort of core work and all, I think that it almost forces you to really get serious about business model changes. And I don't know as an industry that we've had to do a lot of that. We've had sort of moderated change management with what we've done so far. I think the change management side, the engagement with the business is really going to change pretty dramatically, whether you call that disruption or not.
Totally agree. And I think that's reflected in the next set of slides when we look at what the insurers actually said were their top of mind issues and what were their top 15 strategic priorities. it reveals a very decisive shift, I think, towards that operational efficiency, that process optimization, and the whole concept of AI enablement, where it really signals this shift to reinventing what it is that we do from a business model perspective, an operating model, to really kind of have this intelligent business foundation that can drive a different level of expertise and productivity and scalability and, quite frankly, growth. I think these top tier initiatives really emphasize that insurers are recognizing that they need to bend the cost curve. We can't be totally dependent upon the investment income. We can't be totally dependent upon raising prices, because that creates this protection gap with customers, that they scale back with their coverage, they don't buy some coverage, all of those types of things, and that's not really what the importance and the value and the meaning of the insurance industry is about. So I think it's been very interesting to see this kind of shift. Gail, your thoughts?
Yeah, the one data point here that was surprising to me is the cyber risk security change between 2025 and 2026. And I would have expected that to just go through the roof, mostly because of AI. And if you think about, I think we're all having conversations about, the risk of data exfiltration and, how to be thinking about PII maybe a little differently. But if you think about sort of the backbone, particularly around agentic AI, and that the model context protocol, it's the universal connector, right? It's changing the world of APIs, and it's going to be a permanent part of our architecture. And what that introduces is a universal connector. So to me, I think that if you were to, take the survey throughout the course of 2026, I would expect that one to change just because of the introduction of so many new elements and considerations with AI.
Totally agree. And I think when we've been tracking this for so many years, but the way that, and you and I talked about this, when we ask insurers, what their growth plans are, and then also then how these different priorities kind of play in, we actually kind of define these as leaders, followers, and laggards based upon how they're kind of situating on these priorities. And I think that what's really interesting is that the gap between leaders and laggards, any one of these items, can range from a low of 14% to a high of 86% difference. And that's just not a difference. It represents differences in investment, but in many ways, between leaders and laggards, it's really incompatible visions of the future and how the business is going to operate and how they're going to be successful. I think taken together, these priorities reflect leaders' realignment to prepare for this intelligence era. I think it is really very telling in how far ahead they are in comparison, in particular to laggards, but also to followers. And we'll get into some more details on that. Any thoughts on that?
Yeah, I guess a couple of things. I always think that, look, we're in the business of risk, but I think that leaders embrace it maybe a little bit differently, and they realize it's not only the business they're in, but it's actually part of advancing the enterprise, whether that's for your shareholders or your privately owned mutual. That's something that is a continuum, and it shouldn't be sporadic. And I think leaders really embrace that change is constant, and then investment has to flex with not only the business of insurance, but things like these emerging technologies, AI being the popular topic we're really focused on. Leaders, I think, are also faced with these investments, being able to prove the ROI around it, right? Mm-hmm. And I think that if you think about the major transformation investments in core applications and the debate about what that has yielded in terms of concrete ROI, particularly on the efficiency side, because that's, particularly what the CFO wants to measure, I think that has been a bit of a struggle for the industry. And now you bring in AI. And figuring out the ROI around that, given that it's mostly been pilots and not fully operationalized, and also the fact that you have to measure ROI quite differently with that category of technologies versus some of the ones that we're used to on the application front. I think that, that's going to be just a horizon challenge for leaders as they continue to invest. So the disparate, levels here between leaders and followers and laggards, to me, isn't terribly surprising, but I think that these challenges have actually increased in terms of how to think about the ROI for their investments.
Gail, I was just talking to one of the industry analysts, and we were actually talking about this ROI concept. I said, I think that as an industry perspective, when we were replacing legacy with, modern cloud solutions, we sometimes didn't always completely turn off the old legacy, and so we kept running both. And so there's a cost associated to that. We never really completed those efforts. And now with AI, to your point, it does bring a different level of ROI, and it's why we have really focused on, as we've built out some of the GenAI and Agentic AI use cases, we're benchmarking those so that we can help people understand what kind of ROI could you actually kind of achieve depending upon the size of the organization, how many people you do, all that kind of stuff. I think it's really interesting because we have to kind of change our mindset on how do we kind of measure that going forward, to your point. It's interesting because when we ask about, we have an overall optimism index, and it really has a really steep decline. And I think in my mind, it really reflects a lot of the challenges that have been just kind of out there since, quite frankly, COVID, having to deal with profitability challenges, having to deal with a shifting workforce, and all this technology that's coming. So much is hitting insurers that, the optimism for the future is somewhat challenged. But the interesting part is that the surge in core system replacement kind of reflects a surge going up with that green dot. Gail, thoughts?
Yeah, I think, this is, I guess I was a little surprised by this trend, and it is pretty telling. So I was trying to think about, what's driving this, and yes, it's the pressures we've talked about already today on this call, but if you think about sort of fundamentally with the cloud aspect of transformation, now with AI, I think that trust and control are changing. And there's unknowns with that. And so I interpret some of this decline as less about not being optimistic about the known and more about really not knowing where things are going to go. And, with cloud, there's sort of, the industry has had to lean on, obviously the hyperscalers in terms of trusting their infrastructure, but not controlling it necessarily, right? And if you think about AI, it's bringing in those very same elements. And you have, just the early days of hallucination with GenAI and things like that, with large language models, clearly, that is sort of an ongoing concern, I think, for insurance, of course, with every industry and consumers as well. But also there's a control aspect. And if you think about, starting to leverage some of these platforms that are out there, the enterprise security perimeters of the business are changing. And I not knowing maybe all the details behind it, but I'm suspecting that some of these unknowns ahead, we see it as exciting potential, but there's also unknowns, particularly for leaders that are making investments and want to be agile and work at speed. I think there's some unknowns there, and that may be behind some of the optimism trend.
I think you're spot on. I think the magnitude of the potential impact of AI and the lack of readiness, because we know that there's still many that are not even in the cloud, that they're really operating on a lot of on-prem, very highly customized solutions, and that's going to be a challenge and, quite frankly, a risk.
Yep. A lot of cyber risk with on-prem still.
Exactly. The interesting part is that, when we split it out between leaders, laggards, and followers, leaders really defy this trend. And what is happening here is that I see it from this perspective, that there's a powerful and consistent relationship between the strategic activity and the initiatives that we talked about previously, and we'll go into more detail about, and growth outcomes. That multiplier tells a story, engages these leaders that they have much stronger growth. They're much more engaged in what's kind of happening in the market. And I think what's interesting is that I don't think that growth is occurring randomly. It's really a strategic activity that's not a one-year anomaly. It's persistent, it's widening, and it's compounding based upon the strategic initiatives and their focus at moving the business to this kind of new era of insurance. And that's where I think that instead of looking at it as independent projects, where is it we want to be in 5 years as an organization from a business perspective, from an operating model perspective? And that has to be your strategic plan, and where your investment then is in the initiatives that are going to help you get there, and the execution of structural modernization that's both business model and technology foundation that can really help create that innovation, bring new products to market, expand channels, and really drive that growth. And so I think more so than we've seen in a number of years, that strategic plan and that vision of where the company wants to be and how you're going to get there is more important than ever, given the pace of change.
Yeah, no, I completely agree with that. And, it's interesting because I like to think about, if I take what you were just describing, it's important to transcend underwriting market cycles, right? To really have the resilience across hard markets, which are good times in many respects, and soft markets, which can be more challenging. I think the leaders really have their eye on the game that way, that it is multi-year and their investments are for resilience and durability, as well as advancement, and particularly in a very, very competitive landscape. But I think they approach it that way, which is more strategic, and it is about sort of transcending. I think if you're a follower or a laggard, again, you're typically under-investing, whether it's out of caution or whatever the reason is for that. But you also, I think, become more vulnerable to some of these market swings, and actually that's where you see some widening, if you will, between those leaders and followers and laggards, is these market cycles really driving different achievement of result in the combined L&E.
Yeah. And this slide just kind of reemphasizes what I talked about. At the top is the 6 key strategic activities. Correlate that to the growth. And what you can see here is that growth is correlated at a much higher rate with these strategic activities, which should not be a surprise, that if you're bringing new products to market or you're expanding your channels, you would expect to have growth. But what's really interesting here is the focus on innovation and the focus on replacing those old legacy core systems. Those also are really fundamental to really driving that growth, and has really kind of highlighted this shift in where leaders and followers and laggards are going.
I agree.
All right, so let's talk about business priorities. Mary, that's near and dear to both ears of my heart. When we looked at the business priorities, the market priorities in particular, the response by the 3 constituents, what we find is that the year-over-year comparison reveals just some modest improvement year over year, but it reinforces a broader theme that we found throughout the research, and that many insurers are continuing to operate with a business as usual mindset, rather than shifting toward a bold new business model that is that vision out there that you want to be, that business operating model, and that you're reinventing yourself to be able to enable growth competitiveness of this new era. And what's interesting is leaders consistently score higher, indicating really active execution, something that you talked about, Gail, across nearly every one of these market expansion levers, demonstrating a willingness to pursue some higher risk, higher potential opportunities. It shows almost double and triple digit percentage gaps between leaders and laggards. Once again, highlighting this divergence of strategic and structural kind of focus, leaders versus those laggards. Thoughts, Gail?
Yeah, I mean, to me, just the current versus new market is striking. That leaders are leaders really in both categories, and it tells you that they've got sort of speed 1 and speed 2 going on, right? They're not only focused on their current product and current channel, but they're they know that they need to be innovative, invent where they can. That's new markets, new segments, whatever that might be. And I think that's the story headliner out of this picture, is that they're dominating across current and new markets.
Yep, exactly. So when we look at the next one from a product perspective, kind of dive into that a little bit more, is leaders consistently score well above, once again, the followers and laggards across all of those categories. But the interesting thing is that those followers and laggards, I think, really demonstrate insufficient activity to even close a widening gap with those leaders. I mean, we've got some pretty darn substantial gaps here. And to me, it highlights, to a point that you made, insurers that are accelerating product innovation are really going to help drive that. But we have a number of them here in the follower and laggard category that are not accelerating that product innovation. And despite, increasing risk complexity and exposures and a growing demand for more flexible, maybe usage-based, embedded, or real-time connected offerings, they are running a risk of losing customers and declining revenue as customers shift in their product choices. And when you look at the next slide, tied into that from a channel perspective, because these kind of go together, this whole channel perspective just kind of accelerates that even more. Instead of, we all know that the independent agent is not going away. Agents are here for both segments of the business, but there are a lot of other options out there for actually bringing product to market. The ability for some of these leaders to actually do this across this wider spectrum of channels, test them out, see how they're working. They're really focusing in on reaching a whole different maybe segment of customers reaching and when and where they want and need to buy insurance. And it's created a broader ecosystem that their brand and their reach can really help accelerate that growth. But it also takes a different set of products to be able to do some of these different channels. Your thoughts on this, Gail?
Yeah, I mean, I have two thoughts, one on the product slide and then one on this channel slide. On the product slide, and product development is near and dear to my heart because I grew up doing a lot of that a long time ago. I think that, we're counting on the specialty segment to continue to innovate, and whether that's through startups or mature companies, and I think that's where we typically see most of the innovation on the product front. And that can be, risk management services as well as, risk transfer insurance products. And I think that the E&S will continue to be sort of a systemic change here. I don't know if we're going to see quite the ebb and flow that we have historically. That will help, I think, with avenues to bring innovative product, whether you start in E&S and move to admitted or whatever that looks like. But if you look at, and I'm paying close attention to this one, just having lived a long, long time ago, D&O coming on the scenes and, transaction liability we now know as reps and warranties, and cyber liability, we built one of the very first products at Chubb, we called it media liability. So I'm watching what's happening with AI. Because I'm like, oh yeah, that's not covered in the GL or or anything like that. And of course, like many of these other products historically, it starts with the knee-jerk reaction. Well, we don't have arms around that exposure. We can't price for it. We never intended it. We're going to exclude it, right? ISO coming out and exclusion is sort of the signal on that. However, there are some markets starting to have products, right? And they will be very cautious and they will learn and all that. But I think that's a great example of an industry that, again, despite some knee-jerk reactions around, will step up and find a way to quantify risk for AI by product line and eventually come up with a distinct, product or coverage or, as endorsement or whatever that mechanism is that can be underwritten, can be priced. So I'm very encouraged that, we do have a history of this on the specialty side, and there's signals that that's continuing. And to me, that's a bet for the future on this industry.
Totally, and I think it's also a reflection of the double-digit growth that we've seen on the E&S side, and also in the MGAs that often, are involved in that specialty side of the market as compared to kind of the traditional personal and commercial lines products in the market for the last 3, 4, or 5 years.
Now, on the channel side, I don't know if people paid attention to what happened in the markets on February 9th, but, there's this little AI announcement about a carrier basically using AI for, direct quote and policy, and, that was interpreted by the market as who needs brokers anymore. So the large brokers, the market got spooked, and their shares took a big hit on Wall Street. And so, I don't know, Denise, I've gotten so many questions about, okay, should we be worried? Are they, is this the beginning of disintermediation? And look, we've seen this movie before. It's not the first time that you can go online and get a quote, right?
And at the start of the InsurTech, we were going to get rid of distribution.
Exactly, yeah, we're getting rid of insurance as we know it, the big moat, right? So I think that it's interesting. What's interesting to me about that is not that I think that was necessarily a rational, reaction to AI kind of bringing the potential for, quote, maybe without an agent. And that's certainly, we've seen that in personal lines and even some extent small commercial. But it was more the fact that the market is, probably doesn't necessarily understand insurance deeply, is looking at the power of AI to kind of disrupt everything. And, but I don't know that we're done kind of seeing insurance being somewhat tied to the whims and the just nonstop, feverish pace of AI, surprises. And we just have to be aware of that. But I just found that particular February 9th activity to be interesting.
There's been a lot of spooking of the markets around AI. We'll get to that in a minute. So when I look at the budget priorities, this one I think is very telling. It's really a stark difference in investment. I think that, we're seeing, here leaders are very substantially increasing their budgets. They're not keeping their budgets relatively flat. They're really increasing it. And I think that this gets to this kind of two-ski perspective you talked about, Gail. You've got to keep your business kind of going today because it's paying the bills. And so you need to do things that are going to keep it going, but you got to be building this business for the future and the technology that's going to be needed for that. And they're finding a way to balance that out, that they can increase investment, but also do it more so into that business for the future. And I remember personally, inside of an insurance company, when we were shifting the strategy, I had to take my teams and really kind of reallocate them. Business as usual, but I had to reallocate a bunch of resources so that we could begin to build out the technology and implement the technology we needed as we completely shifted from a product to a customer kind of strategy, because it required a whole different set of technology to be able to do that. And I think those that are finding the way to do that, by cutting back maybe what you're doing in a business as usual, is it really necessary versus what can we do to invest in the future, I think is really important. And as a note, this is really one of those key things. I know there's some people don't like it, that whole innovation criteria that AM Best has. That's really what they're looking at here is, are you investing into the future of where you need to be versus are you just keeping business as usual? Ultimately, that's what they want, because they recognize the need to invest to be able to make sure that you're viable and competitive in the future. Gail, thoughts on that?
Yeah, I think, to me, this could be an example of, leaders really outpacing the followers and laggards in terms of the duality of investment between legacy transformation and AI. And if you think about it, AI has introduced an increased urgency around modernization of your core. And so for those that really have gotten behind or have failed to start, it's not going to be enough to isolate some budget for some AI experimentation if your core isn't going to be responsive within that ecosystem to actually work with AI capabilities. And I think that's, something that'll play out, but the interdependency between the continued transformation of your legacy core and the introduction of new capabilities through, mostly through AI, that dependency is going to play out in how people are really, advancing, their outcomes with these budgets that they're going after. Because if you think about the budgeting, it's even isolated between, okay, we're going to do this with AI and then everything else for lights on or continued modernization program. Like, this has to come together. The architecture has to come together, but also the budgeting approach for the business has to come together.
Oh, totally. I think it's times they are changing really quickly. All right, so let's talk about technology. What's interesting about this is that, we actually separated out from a legacy on-prem. It might be a modern cloud solution, but then we also said, is it an intelligent cloud solution, meaning is AI embedded into that cloud? And what is interesting here is that across policy billing and claims, leaders really demonstrate a lower dependence on that legacy prem environment, and they're moving both to just modern cloud, but even more importantly, intelligent cloud platforms at a much greater rate than followers and laggards. And I think that this widening technology foundation gap is going to really be a part of this reshaping of the growth and competitiveness of insurers. My statement earlier, in 5-6 years, could we have insurers that see a whole different level of productivity and efficiency and effectiveness that really changes the financial metrics and really redefines better pricing for customers out into the marketplace? I think this is where we're on the verge of that, because it really creates a whole different level of environments that are really, really important. And when you tie that into this next slide, and then we can talk about the two together, Gail, it's even more apparent here as well into the other kind of surrounding systems, whether it's the underwriting workbench, the near and dear to your heart, enterprise rating and pricing solutions. Those things are all kind of coming together, and it's really highlighting the discrepancy in modernization maturity between leaders versus followers and laggards. And leaders are finding a way to build that new technology architecture, but more importantly, the business architecture that is really going to redefine their business models. Thoughts, Gail?
Yeah, I mean, I think on the prior slide, what that says to me is that there's really pressure to truly get to outcome-based metrics and not just talk about them, where we're seeing some potential convergence on the technology front. If you think about, rating and pricing, predictive model pricing, and kind of what's happening, with rate promulgation and testing and deployment and filing, on the actuarial side over to sort of the runtime side for underwriting and ops and agents and things like that. We're seeing some opportunities in the vendor market to really start converging what is happening in the actuarial side, into kind of what, is happening, day to day on the front line with underwriting and operations. And that's great, right, to have some technology options to bring these closer together and get speed of deployment of, rating and pricing changes, into the market. But I think what comes with that, and I'm not sure we've seen this yet, is an opportunity to look at the operating model, right? Because these are all silos. And, you find if you have some convergence of tech and you bring AI into it, but how are you changing how underwriting and product and actuarial and data science and IT actually work together? What are those accountabilities? What are those processes? What are those metrics? I think that is still in front of us to figure out.
Well, I think it offers a really great opportunity to somewhat collapse the superficial bridges that we had between these different areas, that it brings it all together in a much more cohesive way that allows a level of speed and innovation that maybe we haven't been able to achieve.
Yeah, there's an interesting question that popped up. I think it might be around this particular slide around, kind of markets and by the way, obsolete regulations. I think you would find a global consensus that continues to be an issue. And I think that, it is down to market and kind of, in LATAM, you have crossover between P&C and life and health. And so, kind of ways you can innovate and how your channels work, you have to think about that, because it can be product innovation or pricing innovation. It can also be, how you segment your channels and your go-to-market and your affinity relationships or what that is. So innovation can take on different forms. But I agree with the comment that, there is an obsolescence on what regulations are trying to protect in the insurance industry and kind of the reality of innovation really serving in the consumer's best interest. And I think there's some disparate, maybe a disconnect there still.
Yeah, I think what's interesting there is that we'll be coming out with our annual kind of consumer research, and we tie it into also small medium business markets as well. But what's been interesting is that I've had a conversation off and on with a few of the regulators, at least here in the U.S., because they often will download that research. Many times the conversation will turn to, we didn't realize that consumers really want to have these types of products, and yet we're inhibiting that. We've got to be much more sensitive to how their needs and their behaviors and their expectations are changing, because they're still operating underneath false assumptions from 10, 15, 20 years ago, Gail.
Yeah. Yeah, E&S is a perfect example, right? You think of it as market of last resort, and you need 3 declinations. Well, no, it's actually, the avenue for innovation that is free of some of the constraints, and particularly in the U.S. market with our 50 state plus regulations. It allows you to experiment. It allows you to have freedom of rate and form and evolve and adapt, very rapidly. And I think that, we have more buyers that, say, okay, it's a different writing company, but, it's still A-rated. Or so they're not looking at it like, ooh, they have questionable capital, surplus support, and more about actually that's why I think it's a systemic change that E&S will stay here, because I think it is becoming more and more a permanent part of how the innovation cycle can work. And yes, ultimately, many products should and will find their way to the admitted market, but I think the combination of markets is here to stay.
I totally agree. So when we look at distribution management, kind of back to the whole channel perspective, what we find here is that while there's continued consolidation of agent and broker channels, the importance of, distribution, onboarding, the licensing, and then the whole compensation management aspects are really, really important because they influence that channel partner's view on whether the insurer is easy to do business with. That phrase has been around, it's been around for decades, Gail.
Yeah.
And we still haven't figured out how are we going to be easy to do business with. And I think this is a growth lever that the leaders are really committed to be able to make it easy to do business with, because we know sometimes they haven't always been easy to do business with in the past. And I think that the consolidation of the market, particularly for agencies, MGAs now even, and brokers across both segments, that is going to give them more power and influence in who they're going to do business with. And so for those that haven't really focused on this ease to do business, it really puts them at risk from a growth standpoint.
I agree.
All right, so let's talk about our favorite topic, Gail, data and analytics. All right, When we asked this year around AI and machine learning models, where we've been traditionally with AI over the last couple of decades, building out, fraud models, and it could be underwriting models, whatever it may be, we're continuing to see a rapid adoption of these models, particularly for leaders. But, what's encouraging here is that followers are right there with them on most of the areas. And even Laggards are in some areas that they're right there with them as well. But I think that what this has really highlighted is that they've become a really significant part of the business and how they're doing business to make sure we can underwrite effectively, we can do claims effectively, all of that. And I think it lays the framework for us to be able to really leverage the GenAI and Agentic AI capabilities to a much broader perspective, because hopefully they've got their data under control and they've got access to the data that they're going to need, because that's going to be even more important at the GenAI and the Agentic AI perspective. Gail, thoughts on this?
Yeah, I mean, my interpretation of this slide is that with the growing use of both GenAI and, Agentic, that there's going to be greater speed in being able to assess the veracity of your model. So if you think about, fraud models, or especially the pricing models and the dependency on historical, statistically valid data and all, you're lucky if you can modify your models once a year, right? Some of these predictive models, especially, right? I mean, it's still a mystery. And I think that, we'll be able to advance this, we'll be able to have greater speed, but we're also going to have to think about, models maybe a little differently in terms of, areas where the model may be generating new insights that aren't fully qualified and grounded in claim activity, for example, but, introducing means of, considering test and learn, for example, to see if you can learn from things that GenAI or, various forms of AI are helping you have, more timely insights into, how does the cycle of insights turning into more advanced models, how do you get greater velocity around that? I don't think we know the answer, but I think that's the horizon ahead of us.
Yeah. All right. So this year we actually dove a little bit deeper into GenAI and Agentic AI, since it's the hottest topic out there. We're still at early stages, but I think that there's excitement and perceived value in the industry and the impact that it's going to have across the insurance operations, as we see here from a quote and underwriting all the way through claims loss control and distribution management. I think that what's interesting here, we put the survey out in November, got the results back, and published the report in January. To your point earlier, Gail, I think if we took this survey again in mid-year, I think we'd see this stuff kind of exploding in different ways. People are kind of looking at piloting and stuff. And I think what's really interesting is that when you kind of are watching some of the publicly traded insurers and their earnings reports, and they're highlighting the use of AI, they're highlighting the use of GenAI, and the value that it's bringing to the business from lower expense ratios or loss ratios or whatever it may be. I think they're setting the stage as to what the expectations are going to be from, shareholders. It could be from, the company's boards, all of that type of stuff, and what the value of this is going to be. And it's obvious that leaders have more of a value in this, but I think that we're still in those early stages of sentiment and readiness, and I think in the next year or so we're going to see some real kind of moves on some of these areas. Thoughts on that, Gail?
Yeah, I think that there's a bit of a temptation to almost over-index on what AI can do. And the example that I see is, thinking about quoting and underwriting as, completely AI-driven and throwing out a rules engine. We don't need anything. We're just going to use agents. I don't think that makes sense. I think that we're in an industry where there's a deterministic aspect of our business, and you may not choose to apply a lot of agentic AI there. You may continue to use your rules engine, but again, it's about coexistence of kind of, technologies that are fit for purpose, and it's not going to be AI for everything. So if you have your rules codified for underwriting or fraud detection or, claim assignment, whatever it might be, you may feel pretty good about those because they are codified and they are proven, and you may not want to throw those out and say, okay, let's figure out if the agents can find something better. I think these come together, they're complementary, and there's things that, agents will be able to do or GenAI summarization that work together with other solutions you have in your ecosystem. And I think that's very, very important. That is about an ecosystem, and it's about the coexistence of various forms of AI along with, some of what you already have in your architecture, and it's figuring out the boundaries and what that coexistence looks like and right tool for the right problem at the right time.
I also think it goes back to the point that we were talking about earlier, where you've got both the technical and the business architecture, that you've got it in place to be able to use all of the data, regardless of, you have access to all of the data. You can then begin to create different agents and use cases. Maybe you start in one place, but you can extrapolate those out into other areas. And I think that's where, instead of just like these little add-ons all over the place, you have an overall strategy and how you're going to take that across the value chain and leverage the data that you have so that you can accelerate what it is that you're doing.
Yeah.
When we looked at it from a GenAI perspective only, obviously there's been more experimentation here, particularly with the leaders, but the followers are really close there behind. It's the Laggards that are quite a ways behind pretty much across all of this. Not surprising, given that it was all about GenAI, when it was first introduced in 2022, and where that kind of value is. I think where it gets very interesting is the agentic AI. This is becoming the next divider for leaders. And I'm encouraged that, at least in a few places, Gail, the followers are keeping fairly good pace, with the leaders. But once again, those laggards are really kind of falling behind relative to this. And I think it's just a reflection, once again, how quickly this whole AI environment is really shifting and changing, and the need to start investing now and start learning and building so that you can keep up with the next layer of AI that comes to us probably next year or two.
Yeah, I think, just to the point you made a couple of minutes ago, you need to think about your target architecture as having a combination of what I think of as embedded AI. And that's very much, what Majesco has done in terms of really building, various forms of AI into the suite. Right, so you're really assisting and guiding and bringing insight to the users across policy, billing, claims, etc. That's a permanent and I think a very important aspect. It's the backbone of our industry, right, of these systems of record. I think the second category is your ecosystem being very, architecturally interoperable for integration with point solutions. And those point solutions could be digital ingestion. There's lots of those in the insurtech space, that are, companies have embraced. Could be, sort of point solution for fraud or for, kind of underwriting triage or whatever. I mean, there's, we're not done seeing insurtechs come in the space. And so I think every company's figuring out, they may not end up with one, they may end up with more than one, but they have to figure out how does their enterprise architecture evolve with these. And again, to my point around MCP being a centerpiece of that, how do you figure out what that target looks like? I think the third category is this agentic. I think of agentic is really a surround, right? It's going to have elements kind of within the core, but it's also going to be going after, activities and tasks and workflows that actually go beyond what policy processing does, for example. And there's a lot of manual work still happening despite how good that automation is within those core applications that can be addressed. So agentic AI being complementary, if you will, to go after some of those underwriting or claims or billing or finance processes, even with modernized systems that remain, manual and can be delegated, and, AI can be an assist, if you will, or AI can be autonomous. So I think those really three approaches to AI are very important to thinking about your target application. I also think that, if you think about the stack, right, and you've got obviously energy, you've got infrastructure, you've got hyperscaler cloud providers here, you've got the large language models. But what I think is missing and has to come, and it will, is really this orchestration layer. And by that I mean business orchestration. And if you think about, the advancement we saw with the core, where logic got exposed into, administrative consoles to rapidly change rules, rating, whatever it might be, I think AI has to do the same thing. I think it has to have the context of the insurance industry so that it knows what to do with the data the right way. It's learning from that data, and that you're able to really build and test and deploy and continue to refine in a very, business-friendly environment where you're configuring, not engineering. And I think that will come. It's starting already. There's a few players out there, but I think that's where it's going, and that will help with the assimilation and the control and the trust in working within an enterprise security parameter. So I think that's all coming together in the architecture. Complicated, but I think that's where agentic AI is kind of almost like compelling that we have to go with our insurance architectures.
I totally agree. And that point that you made earlier with regard to, the partners out there, and there's still going to be InsurTechs, can't agree with you more. In fact, we actually talked about that, and we actually have a customer, a new partner that actually is doing some unique things on the claim side. And it was, they're able to use our library of APIs to really quickly build the connection into it and to create value. And we have a customer who's already using that level of value, that they've built out some really unique AI capabilities that we weren't going to do. So it's not an all or nothing. It is a combination of things that we've really got to think through.
Yep, and it's a multi-model world, not a single model world.
Exactly. So when I think about this, Gail, from an action plan perspective, and would love to get your perspective on this, as an industry, we're all about risk management. That's what we've built our industry on. But quite frankly, we now face profound risk, both strategic and operational, because the pace of change, back to that slide that I showed, all the change, but now particularly with regard to the pace of AI and how that's going to operationally change things. What we've got to really kind of think about is, how do we really kind of create a strategy and a plan to address this risk that will influence and alter the industry and how we consider ourselves as leaders? And I think the three areas that I kind of focused in on were kind of the strategic imperatives. Replace that legacy core. It's not going to do you any good. Think about that new operating model and invest where you can, growth is proven, so that you can build up some success and build up some momentum. And to your point and my point that we've said throughout this, treat AI as foundational from a technology and a business architecture perspective. The cost of waiting is only going to grow. So the longer you wait, the cost is going to be more. And whether or not you are even able to close that gap is even, I think, questionable. Because there's going to come a point in time where the amount of work that needs to be done is going to be so overwhelming, there's no way to get from here to there. And then that's when market relevance begins to erode. Leaders are really acting despite some uncertainty. Followers still have time, but not a lot. You got to get your act together. And Laggards really face some structural decline unless they make some real bold moves here. So Gail, any final thoughts from your perspective?
Yeah, I guess two come to mind. One is, I feel like these leadership challenges, we've just had a monumental leap in what those look like. Mm-hmm. I think that legacy modernization has certainly introduced pressures for investment to modernize the core, to get to the cloud and all that. But I think the advent of AI, it just is introducing levels of risk, an industry that has an aversion to risk despite owning it. And I think that it's going to be even tougher for those leaders in that leader category to embrace and figure out that risk, on the technology side, but also to their operating models in ways that I'm not sure have been pressure tested to date with cloud and legacy modernization. And of course, you've got the dependency, like you're not going any fast with that AI as an add-on. Like, it's foundational, but how does it be foundational if you haven't addressed your legacy core? So, these things are, they're not optional, right? And I just think that just brings in just acute pressure on leadership that is not going away anytime soon. The other kind of thought that comes to mind, we've all been hearing this term AQ, right? We have IQ, EQ, we have EQ, which is the adaptability quotient. And I think that is also going to have to be the currency of leaders in this industry. It's a new test for them to, what does adaptability look like? Because I don't know that they've been tested the way they're about to be tested.
Yep, I agree. Well, Gail, as always, it's always a fun conversation with you. I think together we bring a lot of different perspectives to the table about kind of what's happening. From my perspective, it's never been more of an exciting time in the industry from a career standpoint. And I think there's so much opportunity and potential ahead. Really appreciate your insights. For those that are participating, once again, this will be available up on our website for replay, but we will be creating a podcast out of this as well, so that you can listen to that as you're jogging, as you're riding in your car, whatever it is, get some of these key kind of perspectives again to help you all kind of shape your strategy and your way forward into this new intelligent era of insurance. And Gail, thank you so much for joining me today. It was a lot of fun.
Thank you, Denise. It's a pleasure.
That's it for this week's episode of Future of Insurance Industry Leaders podcast. Subscribe to our market-leading podcast series, available wherever you get your podcast from. Thank you for listening, and be sure to tune in the next time.